Good morning, retail traders. This is Washboard Jim with a Sneaky Snake trading strategy, where I'm going to be talking about chart patterns, moving averages, and being in the now. And also, this is going to be a learning lesson on how to trade stocks that are an initial breakout, that are being called out, and things to look for. And I'm going to give you a little lesson on maybe a preparation for when you get into the next trade. You kind of know what to look for and how to look for it. And then once you're in the trade, you'll know that there's certain places where you got to really be on your toes and get out of the trade. And today it's going to be SLNA. SLNA. SLNA is a travel agency of 110 destinations that could probably take you all around the world, and you're able to work. As you know, there's a lot of gig economy right now. A lot of people in the gig that trade stocks that could travel around, and this would be a good setup. So that's why I'm kind of looking at it. And we're going to go ahead and pull up the chart, and I'm going to give you the 5 rules that I go by when I'm looking at a stock. SLNA, number 1 rule is categorize the breakout process. Number 2 rule, review pattern structure into the breakout. Locate hidden resistance levels in the new highs. Number 4, find your profit protection price, stop loss. Consider additional exposure. If you wanted to add on, maybe if it pulled back and you wanted to add on to it, if you still think the stock is running real good, or add on as it starts to go up. How to play stocks that broke out is the bottom line here. And we're going to go ahead and start off with category number 1. Category number 1, categorize the breakout process. So here we go. We've got a stock here on 180 days that's had a real good run, and penny stocks right now have sold off pretty good, especially in the last couple of years. And they're great opportunities now because they're real cheap. So I categorize that. I know they're cheap. Another thing, we hit a double bottom down here, and we respected the double bottom. But I want to categorize the stock. What kind of stock is this? It's a penny stock. I want to look up the size of the float, which gives me an idea who's trading the stock. If it's a low float pump and dump, or if it's has good news. If it has news coming out, that's always a good catalyst. I want to categorize it. I want to know what kind of trade I'm trading right now. Can it bounce up? Does it have previous exposure of bouncing up? And you go back in different time frames. So we come in here and we look at this stock, and we notice that we have a head and shoulders right here, and it broke out of a head and shoulders. So that's one structure, one category that I know. That we had a little breakout on a head and shoulders, and it came back and respected and hit the 200. So I know it doesn't respect the 200 very much. And then it finally came out here a little bit later, and it broke out of that 200, so it got my attention. Now I know that this stock could be bullish. And then I got to see what kind of stock it is. Okay, so I go to FinViz. And I want to see what size of float it is. That'll tell me what category, what kind of trader is trading this stock. Right now it's got 109 million shares. And then you might want to have another confirmation of the float size. So I want to check out how big the float is. Anything between 0 to 25 million is called a very low float stock. The higher the float between that 1 to 25 million, the less volatility you might see. There's more people that trade them lower float stocks. They're called, low float traders. And that's what they'll trade. I mean, there's all kinds of traders in this market. So now I know what kind of category it is in. And I know it's in hospitality, and it sounds like a great thing for me when I want to retire, go ahead and retire. So I'm going to go back to the chart. Then we went ahead and had the breakout, and we had the pullback, which is natural. We had another breakout, another pullback pre-market, which is natural. Then we had the pre-market run, And then boom, she went ahead and pulled back because we had that pre-market run. And we was getting up there to a high. So I want to know, I'm looking at category. Let me see what category we're in right now. I'm going to look at the pattern structure of into the breakout, which I was talking about right now. We broke that 200 SMA, and then we had the 9 cross over the 21. So as long as that, in this strategy that I have, it's called the sneaky snake trading strategy. It's all about chart patterns, moving averages, and being in the now. Well, I know the 9 crossed the 21 EMA, and as long as it respects that 9, I want to stay in that trade. So I'll go back to that other category. Find your profit protection price. Well, my profit protection price is going to be that 9 EMA. And once we breach that 9, I want to get out of the trade. Simple as that. And I'm done for the day. I got my trade. I took my profit. Now we have 3 white soldiers. 3 white soldiers could lead to an initial breakout. So it pulls back to the bottom of that first soldier, finds respect, and moves on up. So again, we're about chart patterns, moving averages, and being in the now. And then we respected that 9 all the way into after hours and pre-market. Then we had what you call 3 black crows. That's more or less going to be a sell-off. And this is on hour time frame. So I'm keeping an eye on these patterns. I go to different time frames and we can do that. But now, what gave us this resistance? Number 3, locate hidden resistance levels at new highs. So you want to be going up this time frame on the hour time frame, and you want to be putting in trend lines every time you see a resistance level. For example, we have a resistance level right here. So I'm going to draw a price line, and that's going to be a place where I might want to get out of the trade. I'm going to go up to the next resistance level. Depends on the time of day, the time of week, when I want to exit the trade. Friday, it sold off because we have the weekend coming up. Who wants to hold a penny stock over the weekend? Then we have that 1468, and then we have this final resistance up here right around 1889. Now this is a head and shoulders, so you could bring it up one more notch and hit that shoulder line, that left shoulder line, and there's your chart pattern. So you're always looking for patterns and places of resistance, places where you want to set that stop loss. So we come back, and there we are. We hit that 20-cent resistance level. And the next one was 22 with a tweezer top. So I want to keep an eye on them patterns. This is Friday. Friday, things sell off. People take profit. They enjoy the weekend, then they come back in. Monday, Tuesday, Wednesday, Thursday, and Friday are all different days that you need to consider when you're trading stocks. Wednesday is my cutoff. Thursday and Friday, I'm scalping. If I get a good runner on Monday, I'm going to go ahead and take the trade. So we come in here Monday. Tuesday, we had the breakout. Wednesday, we had the run. I got out of the trade. Then I bought it and started scalping it. Thursday and Friday. If that makes any sense, I'm just trying to teach you my strategy on how to trade these stocks. Consider additional exposure. So I know my hard resistance is going to be right up in here. To me, that's a resistance level. That's a falling of a flag. We got a falling wedge, and she breaks out. So that bottom head and shoulders is going to be a resistance. I've got to break that resistance. If I can't break 20, this is a penny stock that's ran all the way from 4 cents, actually from the initial breakout around 5, a little under 5, all the way to 20 cents. That's a 400% increase. That's you got to think about profit taking when you're up so big on a stock, on a penny stock that's under 50 cents. You're in a risky trade. So you need to just keep an eye on the news. Make sure, why is this stock running? The news will tell you, more or less, if there's real news on it. If there's no news, then you know it's kind of going to be a little lit more riskier of a trade to take. I also like to follow the tape. I like to read the tape. The tape is how many shares are being bought and sold. And are they starting to sell $50,000-$60,000 lots of this company in shares? Then I'm going to be a little bit curious on maybe to exit the trade. Are they buying 20,000, 10,000, 20,000, 30,000 on a consistent basis? I'm going to run up that price. I also want to be consistent. I always want to be knowledgeable of the volume of the company. Has it had consistent volume? No, it has not had consistent volume. So that puts it in another category. I know that it's doesn't hold consistent volume. So this is going to be a little bit more riskier of a trade. Now, if it had volume running all the way across here, I'd be a little bit more compassionate to hold the trade longer. But when you have less volume, so there's different things you got to look at. And I talk about that in my videos. I give different resistance levels. So on this stock, I said the pivot point, I forgot exactly what number I gave for the pivot point. But that pivot point is a place, if you're below the pivot point, you're at support. Once you hit the pivot point, it makes a business decision if it wants to go ahead and run into resistance. Then you usually have 3 different resistance bars where you want to take it to. And that's where you want to start consolidating, maybe taking some profit off the table and going on from there. So there's different reasons on how to take a trade. And right now we're pulling back. So I come in Monday and I look at the pattern. We had a nice little knife pulled back all the way to that previous low. And then we closed with a hammer, which is right off the 200 SMA, which gives me a consideration that this thing could be bullish. So now I'm going to use my moving averages for resistance levels. And I want to take this to the 63 and maybe get out of the trade because it has to break the 9 on the hour. And I'll be looking at different time frames as I go through this process. I'll be looking at the 5 minute, which I'd want to take it to the 200 SMA. I'd be looking at the 2 minute, which I'd want to take it to the 200 SMA, which is different from the 5 minute. And then I want to even look at the 1 minute when I'm scalping and day trading. I want to see what kind of patterns, like an inverse head and shoulders. This thing can pull back to 8.5 and bounce right off that right shoulder line one more time. So I'm looking at patterns. We had a triple bottom right here and it fell down, created a head and shoulders. Now you got to break that triple bottom resistance to move it up past resistance levels. So that's kind of how I want to just kind of talk about how to trade stocks and the rules that I like to go by. Number 1 rule, categorize the breakout process. What kind of stock is it? What kind of trade is it? Is it below 50 cents? Does it have consistent volume? What size is the float? Is it starting to break out of a resistance level, which was the 200 SMA? Number 2, review the structure of the breakout. So we broke the 200 SMA, and now we've hit a hard resistance level. 3, locate hidden resistance levels, which was the previous highs, the previous lows, the consolidation area that we have. Find your profit protection price. Set your stop loss. If you're up 200 or 300% and you don't think it, and you're getting a gut feeling that we're hitting a resistance level and we're closing into the end of the day or the end of the week, I want to take profit. I want to maybe hold a little bit for the weekend, but I want to secure my profit. I want to secure it. It's important when you're up on a penny stock, scale out. It doesn't hurt to scale out because them stocks will pull back on you and you can always buy that dip. It depends on the news. Depends on the size of the float. Consider additional exposure. If it pulls back and you think you've got a good little inverse head and shoulders or all of a sudden you get 3 black crows just within minutes, 3 minutes, and you want to add on to the position, somebody's just taking off they're doing what I say. They're taking their profit. They realize that they hit a resistance level, a hidden resistance level, and they're going to get out of that trade. So you got to build your strategy upon that. And that's the 5 rules that I go by. And any stock can be played. Any stock can be played. You just got to be patient. When your gut feeling says, man, I'm up 60% on a stock in a day, take that profit. Who makes 60%? Hedge fund managers don't do that. Who makes 50, 60% in minutes? Not too many people. Man, take that profit. It adds up. Come in the next day, do the same thing. Come in the next day, do the same thing. The volume price action. I'm a volume price trader, so I'm always looking at the tape. I'm always looking at the squeeze. See, we got a squeeze going on. The volume has dropped, and we're at a strong position here to maybe have a bounce back up. Now, gravity, you got to look for them resistance levels. Is it going to come up here and create a head and shoulders? I want to get out of that trade. That's a head and shoulders. There's your head, there's your right shoulder. And if you start slowing down here at this left shoulder line, get out of the trade, because that's a resistance level. It could pull back again on you and maybe even dip. You're stuck in the stock. It knifes on you. Then you're on alert. You got to do what you can to get out of this trade evenly. So if you come up and you break out to where you're even, take it. Exit the trade. Give it another shot later. It better be even than be in the red. So that's basically how I'm just going to try to help you how to trade these things. I love trading penny stocks. I haven't traded them in years because they've been in a hard sell-off. But now we're at all-time lows on many of them, and they're great opportunities to get in and out of these trades real fast. And that's all I got to say. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And have a great day.